the Federal Reserve's latest rate decision. Our special contributor, Larry Summers of Harvard, is here with his take. Larry, we heard from the Federal Reserve this week, and they cut again, second time in a row. Were you surprised at how far Chair Powell went in saying don't expect it in December?
I was slightly surprised, but much more importantly, I was glad. This was the right thing to do. Inflation is much further from its reasonable target than unemployment is. The Fed can have much more of a durable impact on inflation than it can on unemployment. Given deficits, given AI spending, we're probably at or below the neutral rate of interest. There was no reason to be committed into further rate cutting in this environment. So Chair Powell signaled a return to data dependence, to agnosticism about what was going to happen next. That was exactly the right thing to do. Yes, there are risks of a slowdown, but if we get a slowdown and the Fed does a 50 basis point cut 6 weeks later, that is not going to be important. But if the Fed loses its credibility around inflation at a moment of massive deficits, massive political pressure from the administration, substantial international uncertainties, evidence of higher inflation expectations, and it's been a long time since inflation was near 2%. In the face of all of that, this was really the right thing to do.
The Fed may be data dependent, but it doesn't get the data that it once did out of the federal government. How much of a disadvantage is that for the Fed right now in figuring out where we are, particularly when it comes to inflation?
It's a disadvantage, but there are now so many indicators, so many real-time data sets, things like the Million Price Project at MIT, all sorts of sensitive indicators that are being followed by people in the markets on an almost weekly basis, that this is unfortunate, and it's not what a serious government country does to have such a long slowdown, but I don't think it's an immense problem in the grand scheme of things. It's certainly a much smaller problem than politicization. It's a much smaller problem than dealing with budget deficits. This is not the major challenge facing the Fed.
Chair Powell in the news conference talked certainly about inflation. He also talked about the role of tariffs. And at one point he said, look, if you take tariffs, the effect of tariffs out of the numbers, we're actually not that far away from our 2% goal. If that's right, which way does that cut? What do we do with tariffs, incorporating that into monetary policy?
Well, we're not that far away from 2%. After 5 years of being above 2%, isn't that great a place to be, even if you accept that that's true. You can always take some things out of the numbers and then say we're near normal. That kind of argument reminds me of what was Chair Powell's darkest moment in what I think has been a really very distinguished term of service, which was the transitory inflation idea in 2021. Yes, maybe it's true that if you take out tariffs, the numbers will look good, but because people are spending more money on tariffed goods, they're spending less money on other goods whose price is lower, and that should be taken out as well. So I don't think cherry picking the components that have risen is a particularly good way of doing the analysis. I also think it's not clear what's going to feed through into people's expectations of inflation.
One thing that was different about this Fed decision were the dissents. I mean, we went for a long time with no dissents. Last meeting we had some dissents saying we should cut more. This time we had them both ways. Don't cut at all and cut more. Is there a breakdown in the consensus on the Fed, or is it just a more confusing picture we're seeing?
I think it reflects two things. It reflects the confusion of the picture, and I think that the dissent from Kansas City in favor of raising rates reflects, or not cutting rates, reflects what is the genuine argument among serious economists in this moment. The dissent from Governor Miron reflects the bizarre spectacle of a government official, part of an administration that's at war with the Fed in its rhetoric, putting somebody on the Fed on a temporary basis while they're on their leave from their other Senate-confirmed job. I think that that's not to be taken seriously as anything but a politically aberrant moment.
The Fed also said that as of December 1, they'd stop the roll-off of the balance sheet. Is that reflecting a real concern about liquidity? Did you expect them to keep the balance sheet this large?
They signaled that this kind of thing was going to happen. I don't think particularly that the precise size of the Fed balance sheet in an era where we're paying interest on reserves is really that important a variable. In an earlier era, when the other side of the balance sheet was money that paid zero interest, the era of monetarism, you could get very excited by the size of the Fed balance sheet. But I don't find it that exciting a variable to worry about its precise size. I do think it's important for the country as a whole to be terming out its debt more than we have. And from that point of view, the Fed reducing the size of its balance sheet is probably a good thing because it means a little less short-term obligation of the federal government and a little more long-term obligation.
Shortly after we had the Fed meeting, we also had President Trump meet with President Xi Jinping of China over in South Korea. And there were a lot of things announced. President Trump said on a scale of 1 to 10, it was a 12. But there seemed to be a consensus that what we've done is basically just go back to where we were before, and this is going to be an ongoing period of negotiation. How significant, in terms of the economy, is what happened over in South Korea?
Look, I think the most important thing is what didn't happen. This situation didn't spiral out of control into massive confrontation and economic conflict. And it was managed in a way that avoided what potentially could have been very unfortunate and destabilizing outcomes. And that's the good news, and I think it genuinely is good news. I am glad for farmers that they are going to sell more soybeans in China, but ultimately, when one judges the prosperity of the United States in this period or the wisdom of economic policy in this period, it is not going to be about the level of soybean sales to China. So we're going to have to see what happens. The really big issues involve technology, involve competition in artificial intelligence, and it doesn't look to me like, on the read we have so far, that those have evolved a lot. But give credit where credit is due. I think there's a good chance that we elicited some real cooperation on fentanyl, which is not so much an economic issue, but is a hugely profound social issue. And give credit where credit is due. We're managing the situation towards the avoidance of what could otherwise be very substantial turbulence. But this is a book that's got many chapters, and we are still in the early chapters.
Larry, talk about that technology issue that you mentioned, and particularly when it comes to AI. One of the things that apparently was not discussed were some of the advanced microchips from NVIDIA. I mean, you are both a macroeconomist and also sit on the board of OpenAI, so you have a vantage point on this. How do you see the issue about export controls with respect to advanced microchips between the United States and China? On the one hand, there are national defense issues. On the other hand, we do want to have sort of a development of this new technology.
I think it's a very difficult set of issues, and I don't know what the right answers are. I'm pretty sure that the right thing to do is to make judgments based on what will protect American national security now and in the future. And so the approach that President Trump took a couple months ago of saying he would relax the export controls, but only if the company involved would share some of the revenue with the federal government, did not strike me as consistent with our traditions. It struck me as more pointing towards a kind of deals capitalism that is more characteristic, frankly, of lesser nations than ours, rather than a more rules-based capitalism.